Good afternoon, everybody. My name is Tyler Evans. I am one of the founders of BTC Inc. and Nakamoto. I'm the Chief Investment Officer at UTXO Management. Today, we're talking about a very fun topic where we just heard some news earlier today from Mayor Eric Adams here on stage talking about New York City's plan to issue Bit Bonds. So let's start there. Reactions, gentlemen?
Let's hear it for New York.
Woo! Leading again.
I think it's a concrete jungle where dreams are made of. I mean, Mayor Adams showed great leadership today with the announcement of the BitBonds initiative. Largest city in the United States, really taking advantage of the opportunity to embrace the future of finance and to lower the borrowing costs for the important investments that are going to be made by the city of New York in the coming years. I think it's terrific leadership.
It highlights the wisdom of the founding fathers in creating a decentralized system of governance, that we can have experiments in the laboratories of democracy of the states and the municipalities. And I think that Mayor Adams is leading the way. It will validate the thesis, and we will see the results in the market that will then drive a trend towards greater and greater adoption of Bitcoin for financing public entities.
Yeah, there's two things that made me really excited about this. Number one is we have a debt crisis in this country. It's at the nation level, it's at the state level, it's at the city level. And to see innovation happen there from the largest city in America, that is amazing. The second thing I liked about it is that Bitcoin should be bipartisan. It has not been bipartisan. And so to have the first city that do this being led by a Democratic mayor, as someone that's called out a lot of issues that I've seen with Democrats around Bitcoin adoption, that was very refreshing for me.
Well, before we get, let's give it up for that. Bipartisan Bitcoin. But before we get too ahead of our skis here, I want to back up a little bit and talk about what is a BitBond? What did Eric Adams just talk about? What does this concept mean? And more importantly, what could it do for New York City, for America, for the world?
At the most basic level, Tyler, Bitcoin has performed so well that by adding a small amount of Bitcoin into a bond structure, you can lower the interest rate that the issuer pays if the issuer is also sharing in the upside with the investor. And so an investor gets a guarantee of a return of principal, no matter what happens to the Bitcoin. The issuer gets a lower interest rate, and they can make their borrowing costs much more efficient. And to the extent that Bitcoin continues to evolve, as everyone in the world who's paying attention thinks that it will, it's a real win-win for everyone who's involved.
I think it reflects, we saw a similar parallel in Bitcoin mining with the energy usage, where that was a huge criticism of Bitcoin, was that it consumes too much energy. That got flipped on its head with, actually, that's useful for the grid, for balancing the grid. When it comes to the financial volatility of Bitcoin's price, that historically has been a criticism of Bitcoin. It's just too volatile. They'll even say that it's not money because it's too volatile. It's, we can argue about it and ad infinitum, but we can also develop products around it that harness that volatility to create value. And that's what BitBonds do. By taking that upward skewed volatility, combining it with the traditional financial stability of a bond to create a product that really serves a need for the public that maybe would not have otherwise accessed Bitcoin. And it makes a really interesting value proposition for the issuer to be able to continue to finance their activities and avoid what is really shaping up to be a big fiscal crisis here in the United States.
Yeah, so my background, I used to run a $70 billion bond portfolio. And like Paul Tudor Jones, I realized I don't want anything to do with buying bonds. We're in a debt crisis. I want to own hard assets like Bitcoin. And what this innovation does is it actually brings back something that's interesting to fixed income markets. And fixed income markets are massive. The average portfolio is a 60-40 portfolio. A pension might have 25% of their assets in fixed income. Now you have something that drives value accretion. You're not just lending money to irresponsible governments and having your funds be debased.
Yeah, I mean, people need income. Investors need income. Pensions need income to pay their beneficiaries. Insurance companies need income to pay their claims. Families need income for their own purposes. And so you can't fully turn away from income producing investments, but in an inflationary environment, the potential for eroding the principal value is really profound. And so when you add a little bit of Bitcoin into the structure and you improve the downside, because now if something does go wrong with the traditional asset or with the traditional credit, you also have recourse to the Bitcoin, which is better. But on the upside, especially as time goes on, Bitcoin's very volatile in the short run. Over the medium run, it's performed extremely well. And the bonds give you the luxury of expressing that medium run view. And for the issuer, New York City, for that matter, the state of Pennsylvania, the government of the United States, or any number of municipal, state, federal issuers, they can indirectly add Bitcoin to their balance sheet and let it appreciate. And that's a really powerful source of financial energy that will continue to provide new resources for investing in infrastructure, in schools, in public services, offsetting pension obligations, all of those types of considerations.
And Matt, we've talked a little bit about this, but how does packaging Bitcoin in this new format, this new wrapper, in a fixed income product or a bond, how does that make Bitcoin accessible to a new class of investors?
So many investors have mandates, and their mandates require them to have a certain percentage of their assets in fixed income. And to me, one of the things that made me most worried about it as a fixed income investor was not that the US government was going to default on their debt. What made me most worried is that they weren't going to default, but that they were going to continue to print money, and they were going to pay you back with money that's worth less. Well, by putting Bitcoin in these instruments, you actually are hedging that specific risk. And so, yes, you'll get paid back, but you have some upside and protection against the printing of money embedded in the vehicle. And I think that's great innovation. And I mean, we're talking about BitBonds mostly today, but structured Bitcoin, a bunch of Bitcoin fixed income instruments are going to come, and I think it's going to be a massive, massive industry.
At the institutional level, not only do they have those mandates that require certain products in their portfolios, they also have investment committees where you need to come to a consensus with a lot of different perspectives. And so it's not enough to just have one diehard Bitcoiner on the committee, and he can't just push through, hey, we're going to buy a spot commodity that is very volatile, that everyone will panic when it's down 30%. They have to find products from whether it's sovereign grade issuers or other forms of Bitcoin-backed credit so that they can actually negotiate with the other stakeholders in the committee process with the board of directors, where you might have folks who still see Bitcoin as beanie babies and a Ponzi, that it opens up the door for education so that they can understand, okay, here's how to have a downside protected exposure and start to learn about Bitcoin and start on the Bitcoin journey instead of constantly saying no to what is the greatest opportunity in the history of humanity.
Maybe one quick point on that is that pensions, insurance funds, they don't typically buy the full asset of many types of securities or loans. They don't buy a full commercial mortgage loan. They don't buy a full auto loan. They don't buy credit card loans. And obviously, when you think about Bitcoin, if you can actually provide downside protection, their mandates are often to earn 7%. And you have Bitcoin that's growing at 30% per year, that you can actually provide some downside protection to them. It's a massive win for them and still give them low double-digit returns. And then for other people that are Bitcoin bulls, you can have some upside to Bitcoin beyond that. It's a win-win.
So I think we've seen, Bitcoin treasury companies and Michael Saylor kind of address this issue for how do you package Bitcoin for an equity market investor or a index fund. We've seen, issuance of convertible bonds. How do you package Bitcoin exposure for the convert market? What's the size we're talking about here that could be unlocked for Bitcoin by packaging it for the fixed income market specifically?
So structured products is a multi-trillion-dollar market. And so I think you could think of it as some sleeve of that. I think it's $500 million to $1 trillion, which might seem crazy if you look at the market cap of Bitcoin today. It's such a massive portion of it, but I think if I was giving a pitch to the board of directors of a pension, like when I used to work at CalPERS, and I could pitch to them downside protected Bitcoin with still decent upside, I think that's how you bring a lot of these institutions in, and I think it's a massive opportunity.
I also think that when fixed income investors think about Bitcoin and they think about the risks, they also have to put those risks into the perspective of the other forms of collateral that they're lending against and looking at what comparatively are the risks and how do they sum up. Because if you only look at the risks in one dimension of, oh, well, what if we lose the private keys, right? Well, you can also make the argument of, well, what if a building burns down and you have a loan against it? Well, you have insurance. There's insurance products around Bitcoin as well. And so there's lots of risks that can be mitigated and thought about. And they should always be looked at comparatively with other asset classes where, for sovereigns, we saw in Europe, there was a sovereign financial crisis. So it's not like every other form of collateral is immune from any kind of risk or that Bitcoin is particularly vulnerable to them. What they're thinking about in terms of the volatility is how nascent it is. Bitcoin is 16 years old. I think we should acknowledge that that's pretty young. But we should also look at there's a quantitative track record of Bitcoin's price appreciation that is driven by fundamental adoption. And we can reason about why are people adopting Bitcoin because of its decentralized properties, its scarcity, its ease of use, 24/7 transactional global capabilities. We were just hearing about the Lightning Network, right? So there is that utility that is driving the financial appreciation of Bitcoin, and it's really important for us to have ways to communicate that to the broader market.
I think that the volatility is only volatile because we're measuring it in US dollars. And if you measure the Bitcoin right, and if you measure the Bitcoin in Bitcoin terms, it's not volatile at all. And you can't say that about gold because every year, and I know Peter Schiff is backstage and he's going to come out, but every year, but they are making for the 250th anniversary a Liberty Bell shaped gold coin. So in case you want it. But every year there's about 2% more gold that's discovered every year, mined, and that's based on current industrial capacity. And of course, AI is going to help mine gold more efficiently, and maybe there is gold on the asteroids or the ocean floor or who knows where or what. But if you got an ounce of gold 35 years ago and you pulled it out of the drawer, you'd still have that ounce of gold, but measured in terms of purchasing power on the gold network, it's half as much, because the amount of gold around you has doubled. The amount of Bitcoin around you has not doubled, and it will not double because we have a programmatic monetary supply. And it's only volatile because the thing that we're measuring it in has no upward bound, which is US dollars, euros, yen, sterling, Canadian dollars, Chinese yuan, and all of the rest. And when you begin to understand that the real risk, the real existential risk that is facing institutional investors today is in the credit portfolio, where if they just get their money back in 5, 7, or 10 years, what that actually means is a 50% erosion in the real value of the principal, then you understand that that is the urgent challenge that has to be addressed from an asset management point of view. And the cost of not doing so is the cost of letting down our teachers, our firefighters, our civil servants, and frankly, I mean, all of us, right? All of the people that we care about. So it's time to really reimagine credit, and I think Bitcoin is the perfect tool to do it.
Well, and obviously this is a phenomenon we've seen, particularly in Europe over the past few years, the past decade, where bond returns measured inflation adjusted in real terms have been negative yielding. And so I want to pivot the conversation a little bit to talk about what this means for America. Andrew, I know particularly you've been very active on the federal level, also the New York State level, working to educate policymakers, the Treasury Department around what could a sovereign bit bond look like?
I think that this is so exciting. I mean, Senator Lummis has gotten a lot of shout outs from the stage of this conference, but she deserves another. Her leadership for this community has been second to none. She deserves it. She deserves it. But you know, Hohns has been doing an amazing job, and David Sachs, when he spoke here yesterday from the main stage, he reiterated that the president, in his executive order, has instructed Secretary Besson and Secretary Lutnick to acquire Bitcoin, provided that it's cost neutral to the federal government. And I think that they're taking that very seriously. I know that they're taking that very seriously in the Congress and in the executive branch. And what the BitBonds proposal enables is to actually go one step further, and that's for the president to be able to say, we're building the Bitcoin strategic reserve at a net savings to the United States government because it reduces our interest rate on the federal debt. And with the interest rate now, what is it? Most recently, 1.2 trillion, but defense expenditures, 850 billion. It's not in the right position. We all know that that's not in the right position. It's not sustainable. So if we can lower that, and of course we started rationally, you know, we said, let's do 2 trillion. 2 trillion, it's actually less than 10% of the total US Treasury market. So it sounds like a big number. It is a big number, but it's not a big number. But let's start with, you know, let's start with 25 billion. Let's start with 50 billion. Let's work out the kinks. Let's build the market interest. And we can see with MicroStrategy and the success that Michael has had, which is phenomenal and phenomenally innovative, that buyers are going to come because they're thirsting for a solution. Fixed income investors around the world are thirsting for a solution to the same challenge of inflation that we're all thirsting for here in this room. So I think it's a very sensible proposal. And I would encourage everyone, please, if I could just say one thing, pick up the phone, look up the telephone number of your congressperson and your 2 senators and give them a call and say, I want you to take seriously the BitBonds proposal and the Strategic Bitcoin Reserve. The Strategic Bitcoin Reserve is the locomotive. The BitBonds are the fuel for that locomotive. They power it faster and further. We want you to take it seriously and give me a call back and tell me your opinion on that. And if every single person, if 35,000 people do that, it in and of itself will add so much momentum to the initiative.
I think there's urgency in adopting the BitBonds proposal. Our core belief as Bitcoiners is fix the money, fix the world. We don't want to see the world burn down or collapse, right? We want to upgrade the monetary system, upgrade the financial system to a better world. And I think BitBonds offers a really great bridge to that. And it's really incumbent upon us as advocates for Bitcoin to drive forward adoption at every level in our communities, in our families, and at our state level, at the corporations where we work, and of course, the pension funds that are providing retirements, the insurance companies that have to pay claims. They also have the same financial needs and the same urgency to getting exposure to Bitcoin returns as anybody else in this audience.
I totally agree. And to me, the message for us as Americans is we have to put America first. I'm always an America First maxi before I'm a dollar first maxi. And the reality is we have a debt crisis. I would love for the dollar to be the reserve currency forever into the future. I would love more for America to be the most dominant superpower forever into the future, even if that means potentially sacrificing the dollar a little bit. And so to me, the first country that stockpiles a war chest of Bitcoin will win. And I think it's great that we have people from the government coming here, David Sachs, Hohns, Cynthia Lummis, the Trump brothers, coming here and saying this is important to us. And we know that they're taking it seriously. And I do agree with Andrew that do not discount if every single person in this room picked up the phone and called. You can just make things happen.
And you know, it's like, well, what's the alternative? I mean, really, like, okay, if we don't do this, what do we do? You know, I mean, in 1981, we crested $1 trillion of funded federal debt. Now we're at 37 trillion. That's a compound annual growth rate of a little bit more than 8.5% per year. It has transcended all presidents since then, all Congresses since then, and now, at this moment, for the first time, and really in my lifetime, there's a popular swell of support and a political movement that has formed around fixing the money and fixing the world, as Pierre said. And I just think, you know, if not now, when, and why not now? And with Mayor Adams and his leadership, New York City is a trendsetter, and I think it's a great opportunity for us all to take advantage of this moment.
Well, I think the moment's never been better, especially as you look over the past couple of weeks. We've seen recent weak auctions for Treasury issuances coming to market. We've got the crushing weight of this sovereign debt load on America. And with the budget bill that just passed through the House, you have a lot of politicians essentially admitting defeat to cutting spending and resorting to the theory that we'll be able to grow our way out of this debt load, which we have to keep refinancing at higher and higher rates. So how can BitBonds solve this issue for America?
Well, I'm just actually reflecting, you know, Mayor Adams, I do want to give him credit and his whole team because it's just a little bit of an inside picture. David Bailey really pushed behind the scenes to get them to focus on the BitBonds opportunity, and a lot of people were supporting that. But it really came together with a lot of momentum and a lot of focus over the last several days, and in particular on the evening of Memorial Day, that team, that group of public servants from the city of New York was switched on, tuned in, and working to put Mayor Adams in a position where he could make this announcement today. And on that call, Mayor Adams said, well, what would you say would be the biggest risk? And I didn't really have an answer because I think it's a good program. It lowers the interest rate, it puts the Bitcoin on the balance sheet. But now that you mention it, Tyler, I think I do know what is the biggest risk. And the biggest risk is that we don't do BitBonds. And if we do BitBonds, we don't do enough of the BitBonds, because then the institutions that are important to us in our country, such as the city of New York, the city of Philadelphia, the city of Los Angeles, the city of Chicago, by the way, the state of Illinois, $54 billion budget last year, $11 billion pension stabilization program. Why do you think people are leaving Illinois? That tax burden is crippling, and it cannot last. But if you put Bitcoin on the balance sheet, you're putting an asset onto the balance sheet that is poised to appreciate more rapidly than the liabilities are poised to grow. And that's the same situation for the federal government. By issuing the BitBonds, we have a program, because paying off the debt, we're not going to pay off the debt. That's not realistic. But what we can do is we can grow the asset side of the balance sheet much more rapidly by adding Bitcoin to the balance sheet than the liabilities increase. And then we can achieve a really remarkable strengthening of the credit ratios and the credit position of the United States, which puts America in a much better position to start our next 250-year chapter.
Bitcoin is the only way we can grow ourselves out of this crisis of the national debt. Look at what's going on with AI. AI does not pay income taxes, right? AI cannot grow our way out of the national debt. Humanoid robots do not pay income taxes. They're not going to grow our way out of the national debt. What we need is to take the asset that has been growing the fastest for the past decade and harness that in the right way to not only help the federal government and other governments and other institutions meet their mandates and their requirements, but also on the investor side for the normal Americans who they might not necessarily have anything against Bitcoin, but they get a little nervous looking at the price chart. Well, let's make sure that they have a product that they can invest in so that they're also participating in this rising tide lifting all ships.
Gents, this has been a great discussion. That's all we have time for, so we'll leave you with the common refrain here. Fix the money, fix the world. Thank you.